All right, I'm going to do a really quick rundown of what I consider my A plus setup and what I look for every day. So I trade ICT, and most of you guys, if you're an experienced ICT trader, or even if you've been learning it for a few months, you're probably going to be blown away with how simple my setup actually is. Um, so if you're learning ICT, or if you have a bit of experience, you probably think that you need all of this. Now, there's nothing wrong with anything on this list. If you use it and you're making money and you're profitable, great. Don't try and fix something that doesn't need fixing. But if you're new to smart money concepts or ICT, you're probably going to be looking at all of this. You're going to be learning the market maker buy or sell model, breaker blocks, order blocks, Enigma, whatever that, I don't even know what that is. New week opening gaps, mitigation blocks. You're going to be looking at the weekly, the monthly charts. I believe that's one of the first things that is mentioned in the 2022 mentorship is that you need to be looking at the weekly chart, which I disagree with. If you're only trying to, if you're happy with capturing 50 to 60 points, you don't need to be looking that high. But you think that you need all of this, and you really don't. I don't even know. I couldn't identify, the market maker buy model. I kind of know what a breaker block is. I really don't know, exactly what an order block is. I don't know what Enigma is. Mitigation blocks. I'm not really sure what that is. The weekly, the monthly chart. I haven't looked at even a weekly chart in probably 6 months because I just don't need to. Right. So most of you probably think you need all this when in reality, here's all you need. You need the 4-hour external range liquidity or internal range liquidity, and you just need a lower time frame break a structure fair value gap. It's as simple as that. It's really, this is all I use. I don't use any of this. This might surprise some of you, but yeah, I use fair value gaps on the lower time frame and 4-hour external or internal range liquidity. All right, so I'll jump right into it and I'll show you a setup that I took last Friday. I believe I captured 1.6R on this one. Almost got tagged out, but I got a bit lucky there. Just avoided my stop. But anyways, I always start on the 4-hour. This is all my chart looks like every day. There's nothing else than this. There is the lower time frame, which will move, and then on the right I have my higher time frame, which is the 4-hour. I never go any higher than that. I don't need to. I can forecast 50, 60 point moves with the 4-hour alone, and that's all I need. So as we can see here, we have a nice leg down. We have external range and more external range here. Now, if we dive into this leg and we dissect it, well, what do we have here? We have a 4-hour fair value gap. If you don't know what a fair value gap is, this video probably isn't for you. You need to, go back and do some more studying. But we have a nice displacing leg down here on the 4-hour. And we have this fair value gap. So the market creeped up. I came in, the market creeped up. We had a nice wick into this 4-hour fair value gap. Now the market will do two things. If you've been paying attention, you can probably already guess what that is. It moves from ERL to IRL, back down to ERL, and that's all it does. That's every day, all day. It does that on the 1 minute chart. It does that on the monthly chart. You could say I'm being a bit naive, and I'm just saying that the market. The market either goes up or it goes down, and that's essentially what external to internal is. But it's adding a bit more context, and it allows you to see where the market might reverse instead of just saying it's either going to go up or it's going to go down. It allows you to dive one step deeper and see where the market might reverse. And so the higher time frame is bearish. I see us retrace into this 4-hour fair value gap. Well, what am I thinking? I know that the market moves from internal to external, so I'm going to begin looking for this, which is what I ultimately got. I'm going to be looking, for a lower time frame trade from this internal down to this external. You can see I got that here. I came in a bit late, but we had wicked up to this 4-hour fair value gap. We started to push down. This would have been a good entry too right here. This is a break of structure fair value gap. This is a high probability price leg. We have a swing high with a swing low, displaces down. We have a fair value gap. So you could have entered right here. I believe I came in a bit late this day though, but I just remained patient. I came in, I didn't jump in here. We chopped around, I let it do its thing, and then I waited for the next leg down because we hadn't met the objective yet. This is the objective, this purple line, this ERL here, this is this line right here. So, you know, I'm still looking for that objective to be met. So what do we get here? I'm looking at the 2-minute chart. I have my higher time frame context. So we come up, we displace down, breaking structure here. We have a nice fair value gap, high probability price lag, and I take my entry right here on this fair value gap. Almost get stopped out right here, got a bit lucky, but ultimately I ride it all the way down to this external, and I believe I captured 1.6R on this trade. It's as easy as that. That's what almost every trade that I take will look like. I rarely take a setup from external to internal. I think it's a bit lower probability. It's hard to gauge when the market is actually going to turn down here. It's easier if you have some, another level, way back that you can, that you can use to kind of gauge when the market's going to turn. But my A double plus setup is from internal to external. So what I just showed you was a bearish setup, and the same thing goes for a bullish setup. We are looking, or at least I am looking in my setup, I'm going to look for a delivery from internal to external. So we have a nice displacing leg up. We create a fair value gap. I'm going to wait for the market to draw down back here. And market structure is already bullish, and I see this. Well, what am I going to look for? I'm going to drop down to the lower time frame, and I'm going to look for a model that will send the market back higher up to this external range. It's as simple as that. It works in both. It doesn't matter if you're going up or down. The concept is the exact same. It never changes. So once I see, on the 4-hour here, when I see the market drop down into this 4-hour fair value gap off a nice leg, I'm simply going to look for a displacement back up to this external range and take this liquidity. So I mentioned earlier on the lower time frame, my breakup structure fair value gap model, I like to see a high probability price lag. Now, what does that look like? Well, for a bullish example, it's pretty simple. I like to see some form of swing low with a swing high with a displacing fair value gap that also, simultaneously breaks structure. So we break structure right there. We displace up. You've probably seen this 100 times if you're an ICT trader. You'll see these every day, but this is a high probability price lag. We clear stops down here. We heavily displace up, creating a fair value gap, and I will take my long position once I have my higher time frame context. I will take my long position right here. That is my higher time frames, or that is my lower time frame setup here. High probability lag, fair value gap, boom, we enter and we ride it up. And again, that's all it is. It's a quick video, and that's what I wanted it to be, because it's really that simple. That's all I use. I use 4-hour external and internal range and a lower time frame break of structure fair value gap. I don't use any of this. I don't need to. If you want to overcomplicate things for yourself and you want to dive into all of this and start packing shit onto your charts, be my guest. If you're already using this and you're making money, if you're using these kind of things, keep doing it. Don't stop. If you're fine, don't let me tell you to try and fix something that isn't broke. There's a lot of people out there that make a lot more money than me using this type of stuff, and that's completely fine. That's awesome. But I'm a man who likes simplicity in this game. I don't like to mark up my charts with a bunch of shit. I don't like to be constantly looking for a bunch of things. I like to keep it simple. So this is all I need right here.